Northern Virginia is one of the most highly educated regions in the country, and there are still some things that buyers keep getting wrong, even the smart ones. Hey there, I'm Crystal Walker with Ask a Walker, and you're tuned in to Where to Live in Northern Virginia, where we answer all your questions about Northern Virginia. Of course, we cover where you should live, but also where you shouldn't, the best and worst things about living here, as well as showing you what you get for your money throughout the region, whether it's new construction or well-established communities. Now, if you want help navigating the home buying process, just click the link in the description to schedule your perfect home consultation. In this video, I want to save you from 3 of the most common and honestly, most avoidable mistakes that buyers are still making. And I'm not just talking about first-timers here. I'm talking about people who are financially savvy, career professionals, folks who have bought a home before. But these mistakes, they still creep in, whether it's because the market looks different this time around or because emotions start to take over. And as someone who tends to lead with their emotions, believe me, I can tell you it happens. So let's walk through them together so you don't fall into any of these same traps. Let's start with the one that hits you the hardest, but only after you've already moved. Commute map. This one might seem obvious, but most people only realize how much it matters when it's already too late. Here's what's happening right now, especially in Northern Virginia, but throughout the entire DC metro area. The commute game has changed. Just a few years ago, remote work was the norm. A lot of federal employees and contractors were working from home full time or only commuting in a couple days a week. That made it easy for buyers to stretch farther out, Ashburn, Bristol, Stafford, because they weren't making that trip every day. But now, that's over for the most part. Many federal agencies are requiring employees to return to the office, not 1 or 2 days a week, but 5 days a week. And the impact on traffic has been immediate. I've had several friends who told me commutes that used to be 45 minutes door to door on those 1 to 2 days are now pushing an hour, sometimes an hour 15. That's an additional 15 minutes or more each way every day. And those minutes add up fast. And we're not just talking about traffic. I mean, that's frustration, exhaustion, and even regret creeping into what should have been a dream home. Because if you purchase a home with the assumption that you'd keep working remotely and your company or agency suddenly changes the policy, you might find yourself stuck. And here's the thing, you don't have control over the policy change. You just get an email next week that says, hey, starting next quarter, we're going back to office full time. And now that charming cul-de-sac that's 30 miles out, well, it feels a little bit less charming at 6:30 in the morning when you're on I-95. Now, no one knows if remote work is going to go away entirely, but it's not a guarantee anymore. And if your lifestyle and housing choice are dependent on that remote flexibility, then you're playing a dangerous game. Now let's talk about how this plays out on the ground. So you fall in love with a house in Ashburn. New construction, beautiful finishes, great square footage. The price per square foot is unbeatable, especially when you compare it to closer in areas like, say, Alexandria or Arlington. You check the map, and Google tells you that the drive to your office in Crystal City is going to be about 40 minutes. You think, hey, not bad. I can manage that a few times a week. Except that estimate was pulled at 1:45 on a Sunday. So there were no school drop-offs, no fender benders, no construction work, no federal employees clogging up the beltway. So now try doing that same drive at 7:30 on a Tuesday. Well, that 40-minute drive turns into 70 to 80 minutes easily. And that's on a normal day. So throw in a little bit of rain or a stalled vehicle, and now you're running late, or you find yourself leaving work even earlier. So this is why we always encourage clients to test your commute before making an offer. And I don't mean just punching in the address. I mean actually doing the drive from your potential new home to your office. Do it during rush hour, and do it in the morning and the evening. You want to see how consistent the time is and really feel the stress level. Try to gauge how you really feel doing that 5 days a week. Now, I know that sounds like overkill, but if you're commute sensitive, it might be worth the drive. And it doesn't have to be from a specific property, because with this market, that would be impossible. But if you narrow down an area of interest, like say Ashburn, then make the drive from there. This kind of thing doesn't show up on your mortgage calculator. Now again, I do not say this to scare you away from buying farther out. Some people are absolutely fine with a longer drive. For them, the trade-off makes sense, but don't make the decision blindly. The market and the region are changing, and we're seeing it play out in real time. So if you're house hunting right now, especially in areas with long distance commutes into DC, Crystal City, Tysons, or the Pentagon, ask yourself this: if I had to drive into the office 5 days a week starting next month, would this home still make sense? That one question could save you years of regret, because a beautiful home with a brutal commute becomes a burden fast. All right, let's talk about mindset. And this next one is a silent killer. Stop comparing this market to that market. What do I mean by that? I mean, stop comparing today's prices to what you paid for your last home, or what your sister paid in Florida, or what interest rates were in 2020, or even what some online site says the home might have been worth 2 years ago. Because the truth is, every market is its own planet. Different rules, different pressures, different timelines. Yet somehow we're constantly hearing things like, we bought our last house for $550,000 and got a great deal. We've heard our friends in Charlotte pay way less for way more house. How about we'll just wait until the rates drop back down to 3% again? So let's unpack all that. First, past purchases. Yes, you bought your last home at a lower price. And that's great. You also paid less for gas, groceries, car insurance. That's just how inflation and appreciation work. Home prices in the DC metro area, especially in Northern Virginia, have continued to rise because of demand, job stability, and low inventory. Comparing a 2017 purchase to today's market is like comparing a flip phone to a smartphone. It's just not the same world. Second, we have different locations. Sure, you can get more house for your money in other states. That's true. But you also get different schools, different job markets, and a totally different appreciation trajectory. Homes in Northern Virginia tend to hold their value. This is one of the country's most stable real estate markets. Third, we have interest rates. Let's be honest here. Everyone got spoiled in 2020 and 2021. Rates were artificially low due to the pandemic. 3% was never normal. It was the exception, not the rule. And the rules have changed. So if you're holding out for that again, you might be sitting on the sidelines for years. And in the meantime, at least in this market, home prices keep rising. So what does that mean for you? It means that trying to time the market perfectly is a gamble, but making a move based on your life, your goals, your needs, your job, your family, that could be your win. Buy a home that fits your situation. Lock in a mortgage you can comfortably afford, and then go from there. If rates go down, you'll have options. Your sister's win in Florida? Great, good for her. Your last deal in another city? Excellent. But you're not living in the past, and you're not moving into their zip code. We've got to pay attention to this market in this moment. All right, let's bring it home with our third and final mistake. And this one happens so often, I could probably write a whole book on it. Stop looking at homes before you talk to a lender. And I get it. It's so easy to fall down this rabbit hole. It's exciting. You hop online, you're scrolling through listings, you find one that is gorgeous, has a gourmet kitchen, and now next thing you know, you're picturing your family living there. And then you start sending the listings to your wife or your husband. You drive by an open house or two. You even might schedule a few showings if you have an agent. But then reality hits. You finally talk to a lender and you find out actually the home is far outside of your reach. But now you're comparing every house to it and everything you look at feels like a compromise. And that's because you started at the top and now you're adjusting downward. Here's why talking to a lender early changes the whole game. Number one, you know exactly what you can afford. Not just the loan amount, but the monthly payments, taxes, insurance, and what's in your comfort zone for payments. Number two, you can act fast. In this market, homes move quickly. So if you find a one on Sunday and you don't have a pre-approval, it might be gone by Tuesday. And number three, you'll be taken more seriously. Most agents won't take you to view properties until you're pre-approved, and most agents won't accept an offer if you don't include a pre-approval letter with it. So with your pre-approval letter, you're not just window shopping, you are a ready buyer. And number four, it's also gonna reduce stress. You can stop guessing. You don't have to feel nervous about the numbers. You've got clarity. And with that comes power. We tell all of our clients, talking to a lender doesn't mean you're locked in. It just means you're prepared. You might even uncover loan options you didn't even know existed. Some buyers may qualify for better rates or lower payments depending on where they're buying or even what their professions are. But if you never make the call, then you'll never know. Now, I'm not saying you need to talk to 5 lenders or shop around for days. Just have one good conversation. Get the facts. And if you're not ready to buy yet, that's totally fine. But now you'll have a clear timeline. You know what you need to work on, and you're in the driver's seat. Start with the money and let the home search follow. So there you have it. That's the 3 biggest mistakes that buyers keep making. They're overlooking commute math, comparing this market to a different one, and shopping before they've talked to a lender. These might seem small in a moment, but trust me, they can derail your home search, add stress, or even lead to serious regret. But if you're ready to take the next step in your home buying journey, click the link in the description to schedule your perfect home consultation. We'll meet virtually to talk about your goals, your timeline, and also answer any questions you may have. Thank you so much for watching, and I'll see you in the next video.